Picture for the financial markets and consumers. Since the announcement of a quantitative easing by the U.S. Federal Reserve, emerging markets have been on the receiving end, and several countries had to raise interest rates to keep up with inflationary pressures. The recent petrol price hike and high food prices are really hurting everyone and putting everyone under strain, and management of one's finances is very crucial. Well, to talk about this and other general issues, we are joined in the studio by Siphiwe Moyo, who is the author and former retail banker. Good afternoon to you and welcome.
Good afternoon, Colin. Thanks for having me. All
right, let's start with the basics now. What is your feeling regarding the current turbulent economic times?
It's tough. It's tough times. We're observing that the global economy is still under pressure. The South African economy is no exception at all. So it's really tough times. And the forecast is that it's going to be tough for the whole of this year. The interest rate hikes that we've seen in the first here in January, it's not going to be the last.
So what do you say to the consumer, especially based on the book that you have written about bulls and bears, as you say, life lessons from the financial markets? What can we learn from them?
We can learn a lot from the financial markets, and one of the things that we do learn is the fact that all trends in the economy eventually end, they stop. We've been through a very big economic boom in South Africa. So if you look until 2007, we had a huge economic boom. Property prices were going up 20% and that kind of stuff. It stopped in 2008. We had a recession, and then it looked like times were starting to get better. But now times are really tough. So what it means, though, is that the fact that times are tough now, it does not mean it's going to be tough for a long time. It's going to be tough forever. So we can be comforted by the fact that this too shall pass, but we have to be prudent in how we manage our finances.
Mm-hmm. Yeah, you make reference to the performance of the rand, that
yes,
it bounces back even if it gets knocked down. Tell us about that kind of volatility.
Yeah, I mean, currencies around the world, they go up and down all the time. In fact, many people don't know, but there was a time when the rand was actually equal to the dollar. And there was a time when the rand was like 3 rands to the dollar, and it became, for the first time, 6 rand to the dollar when President Thabo Mbeki was taking over in 2006. But the rand has always bounced back. So if you look, there was a time when the rand was hit very hard in 2001 at 13 rand 84 to the dollar. But it bounced back. It came back to about 6 rand to the dollar again. At the moment, it's really being hit hard. It's 11 rand to the dollar, but it's going to bounce back. It always does. And my view is that that's how life is. If you're in a distress now, if times are really tough, if your finances are really going down, you must always understand that you need to build a bit of resilience and understand that you can get back up again, which is a lesson I've learned from the rand.
All right. Now, you see the issue of misfortune and luck. Where do you draw the line, especially when you talk about the bulls and the bears, where the markets fluctuate and other people are very aggressive during this time? They make money, they cash in, they disinvest, or they buy, sell and secure their money in, say, for example, rand hedge stocks. Some invest in gold and all that, so that they never get poor at one single moment. So then how do you bounce back, especially when the economic times are tough, given the recent increase in the price of petrol? Obviously, it cascades down to the increase in the prices of food and services and all that.
Yeah, I mean, so you have to try, right? You have to try to manage your finances, to budget, to be quite strict on yourself. In fact, many people even have to take back that car that you just cannot afford. Many financial institutions will take back the car if you go and surrender it so that you start again. You can go to debt counseling. You can try all kinds of things. But, the issue is you should never even come to that point. Many of us live way beyond our means. Many of us never really budget interest rate hikes when we do all the things that we do, when we go and acquire debt. And for a very interesting period in South Africa now, we've been living under low interest rate for a very, very long time. And that trend has changed. So, the interest rate that we've had now, it's not going to be the last. So don't acquire more debt. Be strict on the debt that you have. If you get a bit more money, put it into your debt, because the trend that we're in now, it's a downward trend for a while.
Mm-hmm. So just finally, before you go, in your book, you sidestep getting into the nitty-gritties of financial markets, and you are just motivationally speaking.
Yes.
Why is that?
So the first thing, I also wanted to show that financial markets are not this territory for some people for a particular people who maybe studied in Sandton or whatever. I studied in Soweto, I stayed in Orange Farm. I wanted to make sure that I understand these things as well. But then when I wrote the book, I wanted everybody to just learn these jargons. People in the financial markets, instead of saying you must have money, they will say you must inject liquidity. So I want everybody to just understand the basics of the financial markets and be motivated.
All right. Thank you very much for the insightful outlook of how the markets perform and all that.
Thanks, Colin.
All right. Siphiwe Moyo is an author and former investment banker talking to us about his book, Bulls and Bears, Life Lessons from the Financial Markets. A very interesting insight into finances there.